If you're a high earner who donates to charity every year, the One Big Beautiful Bill Act quietly changed something on you. And most people have no idea it happened. There is a new floor on charitable deductions, meaning the first chunk of money that you donate is completely invisible to the IRS. Now, don't get me wrong, you're still giving, which is great. You're just not getting the credit for all of it anymore. The good news is that there's a strategy that not only gives you some of those deductions back, can actually make your charitable giving more tax efficient than ever before. Hey guys, I'm Joel, your Big Law Money Guide. I'm a certified financial planner and I help my clients with decisions like this every day. So follow me if you want to make the most of your big law income. All right, let's get into it. Most people assume that the new tax law was all about income tax cuts, but buried inside is a change that directly impacts charitably inclined high-income earners, and it's not nearly getting enough attention. Under the new law, there is a floor for deducting cash charitable contributions. It's 0.5% of your adjusted gross income, or AGI. So for example, if you make $500,000 of AGI per year and you say donate $10,000 per year, the first $2,500 that you donate will not be deductible on your tax return. That's the floor. Only the next $7,500 would be deductible. In a 35% tax bracket, that's roughly a $900 tax hit. Now, this number might not be that big of a deal in isolation, but compound that over a 30-year giving period, it can add up pretty quickly. So the people that are most affected by this new law are high-income earners who are regular donors, but they're just not mega donors and they can take advantage of all the fancy strategies around charitable donations. Now, keep in mind that this only applies for folks who itemize their expenses on Schedule A of their tax return. If you take the standard deduction each year, you're actually now allowed under this new law as well to deduct up to $1,000 if you're single or $2,000 if you're married. So that's on top of your standard deduction. So what can you do about it? Well, there's a strategy called donation bunching. And it's one of the most underutilized tax strategies for high earners. So take, for example, again, somebody with a $500,000 AGI. So their floor is $2,500. So the first $2,500 they donate each year will not be deductible. And they're donating $12,000 each year to their favorite charities. Now, instead of donating $12,000 each year and essentially only be able to deduct $9,500, right? $12,000 minus $2,500. What if they bunched 2 years of donations into 1 year? So $24,000 in 1 year. The floor still applies, but now they can deduct $21,500 in that 1 year and then deduct nothing in the second year. So now the floor only impacts them 1 year out of every 2. The net result is you recover about $2,500 in deductions every other year. Again, if you're in a 35% tax bracket, that's roughly $900. So over a 30-year career, that's over $13,000 in lost tax benefits. Now that's assuming that your income never goes up, because as your income goes up, the floor goes up and your ability to deduct some of your charitable contributions goes down. So then the issue is just amplified. Now this strategy causes 2 problems. Number 1, you may not have double your charitable contributions available in cash to donate. And number 2, maybe your charities are used to getting your yearly contributions or even monthly contributions. So waiting a year between your donations could affect their budget. The solution to this is to make your first charitable contribution in early January, maybe between January 1st and January 15th. In our example, it was $12,000. And then waiting until the very end of the same year to make your second charitable donation. So from a cash flow standpoint, there's about a year between both donations, give or take a few days. So you're really not feeling the cash flow crunch. And then from your charity standpoint, they're still getting the same cash flow, again, give or take a few days. So your cash flow and your charity are not impacted, but your taxes are greatly reduced as a result of the strategy. Now, if you're giving on a monthly basis to your favorite charities, a bit more planning is involved. It could look like this. In year 1, you make your full yearly contribution at the very beginning of the year, like I said, maybe between January 1st and January 15th. At the same time, you start contributing to a high yield savings account in the amount that you donate every month. So in our example, let's say you donate the full $12,000 to your charity, and then you start saving $1,000 every month into a high yield savings account. By the end of the year, at the end of December, you should have $12,000 plus a little bit of interest in that high yield savings account, and you can make your charitable donation for the end of the year, again, to take advantage of the bunching strategy. And then in the following year, so in year 2, you continue funding your high yield savings account, but you don't make any charitable donations in year 2. And then at the start of year 3, you take the money in your high yield savings account, make your initial contribution, continue to save, and then at the end of that year, you make your donation, and so on and so on. So this only involves pre-funding the strategy up front with one lump sum, but then after that, there's really no difference with what you were doing before, but you get a tax benefit out of it. Look guys, here's the bottom line. The One Big Beautiful Bill didn't change the way you care about the different charities that you support, but it did change the way you get rewarded for supporting them. And for high earners, doing nothing means losing thousands of dollars of deductions every single year. And the bunching strategy doesn't mean that you have to give more. It just means being smarter about the timing of your donations. All right, guys, if you found this video helpful, go ahead and subscribe. I break this kind of stuff down every week. And if you want me to look at your specific situation, you can go ahead and book a free intro call with the link in the description below. Thanks for watching.